Thanks to the new viewers and returning subscribers for returning to the series of investing. We hope to provide you with invaluable content to your satisfaction. Let us continue the series into equity compensation and meme stock. Equity compensation. Equity compensation is when employees of a company are paid stock options, or a similar type of investment. By tying the employee's compensation to the stock price, they are meant to encourage the employee to work to maximize shareholder value. What is equity compensation? Equity compensation is non-cash pay that is offered to employees. Equity compensation may include options, restricted stock, and performance shares. All of these investment vehicles represent ownership in the firm for a company's employees. Equity compensation allows the employees of the firm to share in the profits via appreciation and can encourage retention, particularly if there are vesting requirements. At times, equity compensation may accompany a below-market salary. Key takeaways are: equity compensation is non-cash pay that is offered to employees. Equity compensation may include options, restricted stock, and performance shares. All of these investment vehicles represent ownership in the firm for a company's employees. At times, equity compensation may accompany a below-market salary. Equity compensation is a benefit provided by many public companies and some private companies, especially startup companies. Understanding equity compensation. Equity compensation is a benefit provided by many public companies and some private companies, especially startup companies. Recently launched firms may lack the cash or want to invest cash flow into growth initiatives, making equity compensation an option to attract high-quality employees. Traditionally, technology companies in both the startup phase and more mature companies have used equity compensation to reward employees. With equity compensation, there is never a guarantee that your equity stake will actually pay off. As opposed to equity, or in combination with equity compensation, being paid a salary can be beneficial if you know exactly what you're getting. There are many variables that can impact your equity compensation. There are various types of equity compensation: stock options, non-qualified stock options, NSOs, incentive stock options, ISOs, restricted stock, and performance shares. Companies that offer equity compensation can give employees stock options that offer the right to purchase shares of the company's stocks at a predetermined price, also referred to as exercise price. This right may vest with time, allowing employees to gain control of this option after working for the company for a certain period of time. When the option vests, they gain the right to sell or transfer the option. This method encourages employees to stick with the company for the long term. However, the option typically has an expiration. Employees who have this option are not considered stockholders and do not share the same rights as shareholders. There are different tax consequences to options that are vested versus those that are not, so employees must look into what tax rules apply to their specific situations. Additional types of equity compensation include non-qualified stock options, NSO, and incentive stock options, ISOs. ISOs are only available to employees and not non-employee directors or consultants. These options provide special tax advantages. For example, with non-qualified stock options, employers do not have to report when they receive this option or when it becomes exercisable. Restricted stock requires the completion of a vesting period. Vesting may be done all at once after a certain period of time. Alternatively, vesting may be done equally over a set period of years, or any other combination that the management of a company finds suitable. Restricted stock units, RSUs, are similar, but they represent the company's promise to pay shares based on a vesting schedule. This offers some advantages to the company, but employees do not gain any rights of stock ownership, such as voting, until the shares are earned and issued. Performance shares are awarded only if certain specified measures are met. These could include metrics, such as an earnings per share, EPS target, return on equity, ROE, or the total return of the company's stock in relation to an index. Typically, performance periods are over a multi-year time horizon. Before we continue to learn about memes, meme stock that is, we want to remind you to subscribe to this channel and show your appreciation of this invaluable information by hitting the like button to let others become aware of this content. Also, ensure you activate the notification bell to stay updated with the latest valuable additions to this series. Now let us find out what is a meme stock. Did you know there is a meme stock? Let us learn about it. A meme stock is broadly any stock that has gained substantial popularity and investment online through social media. The term became popularized after investment in retailer GameStop was driven through popularity on the r/Wall Street Bets subreddit. What are meme stocks, and are they real investments? A meme stock refers to the shares of a company that have gained viral popularity due to heightened social sentiment. This social sentiment is usually due to activity online, particularly on social media platforms. These online communities can dedicate heavy research and resources toward a particular stock. Meme stocks often have heavier discourse and analysis in discussion threads on websites like Reddit, and posts to followers on platforms like X, formerly Twitter, and Facebook. Though some believe meme stock communities coordinate efforts to influence the prices of those shares, meme stock shareholders are often an unorganized set of independent individuals, each with their own investment views and preferences. Collectively, their independent actions have been shown to initiate short squeezes in heavily shorted names. As a result, meme stocks can become overvalued relative to fundamental technical analysis. Some key takeaways are: meme stocks are shares of companies around which online communities have formed to promote and build narratives. Meme stocks in their present form arose in the year 2020 out of the subreddit r/Wall Street Bets. GameStop, GME, is widely regarded as the first meme stock, whose price rose as much as 100 times over several months as its meme community crafted a short squeeze. Meme stocks have generated their own slang and language that's used in online forums and social media. These stocks carry an added risk of higher than normal volatility that could be driven by viral posts on various social media platforms. Understanding meme stocks. GameStop, the first meme stock. The YouTube persona, Roaring Kitty, posted a future viral video laying out the case for why shares of brick-and-mortar video game retailer GameStop Corp., GME, could soar from $5 to $50 per share in August 2020. In the video, he explained that the stock had among the highest short interest in the market, largely with short positions held by hedge funds, and that these funds would need to cover their positions in the event of a massive short squeeze, driving the stock much higher. A few days later, the former CEO of Chewy.com and investor Ryan Cohen purchased an unknown amount of GME stock, which Gill acknowledged on Twitter, now X. In November 2020, it became public knowledge Cohen owned a 10% share in the company. On January 12th, he joined the board and the stock rose rapidly. By closing 2 days later, the value doubled, an 8 times increase from the price at the time of Cohen's and Gill's previous posts. Then in January 2021, the short squeeze that the Roaring Kitty had suggested earlier took place in earnest, with the price of GME shares exploding to nearly $500 amid a frenzy of short covering and panic buying. The main victims of the squeeze ended up being a handful of hedge funds, some of which were forced to shut down due to heavy losses. As a result, the meme stock concept adopted a David versus Goliath or Robin Hood connotation of taking from the rich Wall Street elite and rewarding the small retail investor. Roaring Kitty's real name is Keith Gill, who was also on Reddit as UDeepFValue and active on the subreddit r/Wall Street Bets. After the initial meme stock craze, GameStop shares drifted steadily lower, settling at just over $10 a share by the spring of 2024. However, in mid-May of that year, the stock experienced a sudden resurgence, fueled by the return of Keith Gill, aka Roaring Kitty, to social media. Gill, who had been largely absent from the public eye since the height of the meme stock frenzy in 2021, posted a cryptic image from his X account, which was viewed over 24 million times, followed by a series of movie-inspired video memes. While not making any recommendations or indications about GME or any other stocks, these posts nevertheless reignited frenzied interest in meme stocks, causing a massive surge in trading volume and price. GameStop shares skyrocketed nearly 100% on Tuesday, May 14, 2024, following a 74% increase the previous day. This rapid price appreciation caught short sellers off guard, resulting in significant losses estimated at over $1.3 billion in just the 2 days following Gill's tweets alone. The renewed meme stock rally also extended to other companies, such as AMC Entertainment, which saw its stock price jump 120% in early trading on Tuesday. AMC took advantage of the heightened interest by raising approximately $250 million through a share sale. Market analysts and observers drew parallels between the 2024 rally and the original meme stock phenomenon of 2021. However, opinions were divided on whether this new surge would have the same lasting impact, or if it was simply a brief revival of the speculative fervor that had characterized the earlier event. Regardless, the sudden resurgence of meme stocks in May 2024 served as a reminder of the unpredictable nature of markets and the power of social media to drive investor behavior. Tip meme stock activity was given a great boost from bored individuals stuck at home during COVID-19 lockdowns, combined with zero-commission brokerage apps like Robinhood. The Robinhood app saw overwhelming trading volume in meme stocks at times, causing multiple trade delays, outages, and platform crashes. This led to user outrage along with class action lawsuits as well as regulatory fines and restitution of approximately $70 million. There were other meme stocks. While GameStop was the first successful meme stock, it was not the only one. Wall Street Bets users quickly identified other downtrodden stocks with heavy short interest to boost. These included AMC Entertainment Holdings Inc., the movie theater chain that saw flagging profits amid the COVID-19 pandemic, and BlackBerry Limited, the outmoded smartphone maker. Both stocks also saw their shares rapidly increase by multiples. Indeed, as these became recognized meme stocks, members of Wall Street Bets and similar outlets began to acknowledge the humor for the lulls of seeing such legacy companies emerge from the ashes in the stock market. Some meme stocks did not fare as well as others, even with the occasional short squeeze. Other meme names have included, among others, Bed Bath & Beyond Inc., Costcorp, Vinco Ventures, Support.com, and even the meme stock enabler Robinhood Markets Inc. Here's a meme stock glossary. Meme stock communities have developed a specific lingo used in their posts online. Some of these terms include, along with emojis used to denote them online, apes, members of the meme stock community. Some have attributed this to a meme related to the movie Rise of the Planet of the Apes, but others have suggested that the label comes from the banding together of dumb apes to take on the Wall Street elite. BTFD, an acronym for Buy the F***ing Dip. Buying the dips means going long on a stock after its price has declined in the near term and is meant to be repeated after each such drawdown. Diamond hands. This has come to mean holding on to a stock despite even heavy losses, confident that the price will eventually increase. FOMO. Fear of missing out, that if you don't catch the meme stock wave, you'll regret it. Hold the line. A battle cry to encourage others to stand firm with diamond hands in the face of volatility. Paper hands. This is a derogatory slur leveled against those who fail to maintain diamond hands. These are perceived as weak individuals without conviction who sell their shares too quickly. Stonks, an ironic misspelling of the word stocks. This meme predates Wall Street Bets and often depicts a crudely designed bald man in a suit staring blankly at an arrow pointing upward in price. Tendies, short for chicken tenders, tendies refer to profits made in meme stocks. There are several claims for why this fast food item is used for collecting profits. To the moon, the idea that a stock will rise extraordinarily high as if to the moon. YOLO, you only live once, so why not buy into a meme stock? There were other developments. Meme stocks have been a boon to investors, day traders, and brokerage platforms, but companies have also capitalized on the meme stock phenomenon. As a result of sky-high prices and persistent demand for shares among individual investors, AMC Theaters CEO Adam Aron took advantage of the elevated valuation and engaged in a series of secondary follow-on offerings in 2021. This raised more than $1.5 billion in the first quarter from voracious meme stock buyers. GameStop followed suit in 2021, raising nearly $1.7 billion via a secondary offering of 8.5 million additional shares at an average price of more than $200 per share. In 2022, Bed Bath & Beyond announced intentions to sell 12 million shares in a secondary offering as meme stock promoters pumped the value of its stock. However, the stock fell steeply following the company's announcement of the plan. Meme stocks and short selling. One of the features of meme stocks, especially early on, has been that they tend to be heavily shorted names. This means that there is a lot of short interest in the stock, or that a large proportion of the company's outstanding shares have been sold short. Short selling is when somebody sells shares that they do not own, hoping to buy them back at a lower price. It is thus a bet that prices will go down. That seller must borrow shares from somebody who is long the stock in order to sell them. As more and more shares are sold short in this way, there are fewer shares left available to borrow. Once a stock becomes hard to borrow, even the most motivated short seller may be unable to do so. Meme stocks are often hard to borrow, with a high short interest ratio. Stocks are sold short on margin because they involve borrowed shares. As the price of the shorted stock rises, the short seller will begin to experience losses. These losses must be covered in a timely fashion, often prompted via margin calls, whereby the broker demands funds to make up for those paper losses. Ultimately, a short seller may run out of available funds to hold on to the short, and will be forced to buy back the shares at a higher price and close out the position. If many shorts are forced to cover at once, it adds additional upward pressure on the stock's price, as they are all forced to buy the stock and cover at ever higher prices. This is known as a short squeeze, and it accelerates a stock's price increases as more and more short sellers are forced to bail out to cut their losses. Why are they called meme stocks? A meme is an idea that spreads rapidly among people. Memes began to take the form of humorous social media posts and viral videos with the advent of the internet. Meme stocks are so named because ideas about them spread rapidly on social media and web forums. Meme stocks also see communities built around them that promote the hype and elaborate on the original meme, inventing specific terms and symbols to accompany the stock. Is there a meme stock ETF? Roundhill Investments came out with a meme stock-focused ETF in December of 2021 under the ticker symbol MEME. MEME features an equal-weighted portfolio of 25 stocks based on social media popularity and market sentiment. Eligible securities are initially given a social media activity or meme score, the number of times a firm or its ticker is mentioned on specific social media platforms over a trailing 14-day period, with consideration paid to their short interest. The top 25 such firms are included in the portfolio, which is re-examined and rebalanced twice a month. Single stock ETFs have also recently been introduced, which provide leveraged long or short positions on a single stock. Only a small number of these have been approved for trading so far, but do include some meme stocks like Tesla and Nvidia. Or are meme stocks real investments? Meme stocks are actual stocks listed on exchanges and available for trade. In that sense, they are real. However, critics argue that their price performance and appeal have little to do with their fundamentals, and much to do with their entertainment value as speculative playthings, much like casino games. Where are the meme stocks today? In general, many of the meme stocks that saw sky-high stock prices in 2021 have come down significantly in 2022. They are often now trading below where they started before the meme frenzy. Others, notably GameStop, remain elevated, although still far lower than its all-time highs. While some thought that the meme stock craze would be short-lived, the phenomenon remains in force years later. Meme stock communities pumped the brick-and-mortar retailer Bed Bath & Beyond, BBB, to extreme levels in the summer of 2022, when it was up 314% for a short period before crashing back down. Retail investors are also likely to remain keen to pick up on the latest meme stock. Dominated by younger investors, meme stocks are still seen as a way to generate outsized returns in a short period, especially in the face of rising housing costs and inflation in general. But meme stocks also remain very volatile and risky, and retail investors are likely to be the ones to experience the most losses when it all comes crashing down. What's the bottom line? So-called meme stocks became a hot investment theme for day traders and retail investors early in 2021, resulting in short squeezes on hot stocks at the time such as GameStop Corp., GME, and AMC Entertainment Holdings Inc., AMC. Named after the virality of internet memes found on social media, these stocks saw online communities form around them to boost and hype their prospects, even though meme company fundamentals remained questionable. As we end this investing series, be sure to join us on this continuous venture as we delve into everything financial. We also invite you to show your support by liking this video and subscribing to our channel. It is a simple click for you, but a huge support for us, and it is completely free.